Hey guys, so welcome to another webinar. And today we're going to be looking at all the possibilities we have on CO2 report. If you're new here, welcome. And what we do here is simply show you an approach on how we trade the market, on how we approach the market professionally in our own terms. And this isn't any financial advice to anybody. This is just simply our own outlook to educate people and to bring an awareness to the market. That's just all. So the way we trade is we have a three system, which is called, we have COT, we have seasonality, and our probability. COT is called Commitment of Traders Report, and mainly it is literally called smart money. So these are like commercials, institutional traders, people that specifically use these assets for their day-to-day business activities, not speculators like you and I. And what we do is we tend to look at their current approach to the market, and we take our bias based on their current approach. So if they're going long, for example, if you don't know what long means, long simply means buy or it means bullish. So if we're going long, if they're going long, we then just follow them and go along with them. But we just don't follow them blindly. We have to make sure that it aligns with something called seasonality and probability. So the market has seasons. They season the market every single time. So every quarter has its own type of behavior patterns that it exhibits. So what we tend to do is we look, is the smart money moving in a specific direction? Are they going bullish? Is the season the ideal season? The market normally goes bullish, and probability helps us align the date, because COT report doesn't give us the exact date. The report comes out every Tuesday with another 1 week lag in between. So, and the seasonality can give you a date, but what happens when that date falls on a Saturday and Sunday? So you need something to pinpoint that exact entry date, which is what we call probability, which is something we design in-house. We don't take full credit for it because we do have partners that actually give us leeway with this. Nevertheless, what we tend to do is we designed this for our own self, for the use for every members, such as you, so you can come on board and see how it works. Now, enough talking, let's go down to business. So the COT report will look like something like this. I'm just going to load a bunch of them. And it takes a while to kind of load. So I'm just loading all the FX. And the main reason they're in single mode is because it's in futures. So that's the COT. And then the seasonality looks something like this. Let me just open 1-4. I know I haven't opened the COT yet. It's still loading at the top. It takes a while sometimes. So much we dive into what the seasonality look like. Just give that a second to pull up. Yeah, so the seasonality looks like this. So what I was saying is, for example, if gold is meant to go up from, let's say, the 6th of next month of July, all the way till, September the 2nd, for example, we know that. And then when we see the commercials on the COT report, the smart money also buying around this period, the likelihood of that happening is higher. And we don't tend to take trades that are choppy like this. We take trades that are aligned like this. Now, if you've never seen this before, it's just the average price movement within the past 5, 15, and 47 years. And basically what we do with this information is we wait for when all three align, because it seems to be consistent for 47 years. And we just take our trade based on that. Now, we can take our trade based on this alone, but it's not as accurate on its own. So that's why we mix it with COT report and the rest. So let's go check the COT report. Some of them still loaded. Let's give it a moment. Now, before I take any trade, right? Before I start looking at, seasonality and all of that, I tend to look at COT report first. The main reason being the COT report does the heavy lifting for me. So if I see the COT report isn't looking good, I would not just look at that asset in regards to seasonality, regardless of what it looks like on seasonality, because I'm only trying to take trades that, align with my strategy. And the main reason we do this is because globally, trades are done automatically faster than human beings can. So those machines and robots that do those trades don't have emotion, and you're a human, you have emotion. So you want to make sure that whatever you're going to do, it's following your plan that you had, and your emotion isn't coming into play and taking you off course or off track a little bit. So now, gold, what we look at in the COC report is the commercials. So like I said, they're mainly people that use these type of commodities on a normal day to day. Might be Samsung, maybe what they call Apple, Tesla, whatever it is, companies that buy gold anyway, because they need it for their electronic products. You know, that's what we look at. We look at what they do. So you don't get the names of the people that are trading, but you get the position size, how they've changed over time and what the current position size is. So long means buy, short means sell. And what we can see here for gold is they're selling a lot more than they're buying, but I wouldn't do anything because I wanted to mainly look like a lot more people are taking out position of their like long side and putting it into the short. That would look a lot more better. So I would expect one to be negative while the other one is positive. So for this, I would just let that go. And keep in mind, it's not every week you're going to get a full alignment because it's people, right? It's not every week that people's emotion align. If there's war somewhere going on, like the Russia stuff and all of that, uncertainties in the market, people tend to stay away from the market. So the next one, CHF, you can see in the long and the short position, they took out positions from both. So we let that go. Let's see what we got next. So JPY is next. They only added 134 position out of 43. So we let that go. So from all of the asset we have loaded right here, from the 9 sort of futures that we've loaded, we've eliminated a couple of them, and then except from gold is not right. We've eliminated a couple of them anyways, to narrow down which one would be best for us to trade. Next one is euro. You can see they're taking up massive positions on this side and this side. Now the non-commercials are people like you and I, speculators. You can see the smart money are pulling away from the market, both on the long and short side. And people like you and I, or the normal speculators, even some banks fall into this category, they're adding their positions. They're adding positions in the long and the short side. So if these guys are running away from the market, why are these guys going into the market? So there's a possibility that there might be a choppy market coming. There's uncertainty coming. These guys, a lot of them might possibly lose their money. I mean, they'll be taking money off one another, to be quite frank. Whoever is winning, if long is winning, they take some money. Short is winning, they take some money. But we tend to stay away from all of that uncertainties. And you can see these categories non-reportable. Even me, I don't really know who they are, to be honest. But they're classified as that. You can see they kind of move like the smart money did on this one. So, but these guys are the people you don't want to be like. Non-commercials. So what we can see now in USD, there's uncertainty in commercials and non-commercials. Good. So you just let that go. So what we've seen so far in the market this week is there's so much uncertainties. And for that reason, this is a good indication for us to stay away. So what we're looking at now is CAD. There's so much money going to the short side of it and also to the long side. And you can see same thing is happening. You can see these guys are heavily on short, while these guys are heavily on long. These guys' positions are way heavier than these guys' positions. But what we can see is it's not aligning with our strategy, so we take that out. NZD doesn't look good neither. Take it out. AUD doesn't look good neither. We also take that out. We know 3 pounds, and what does that look like? Not good neither, right? Yeah. So you can see that too. That's literally over half of the position that came out from the long side. That's scary. Literally, that's very scary. I don't even know if I've ever paid attention to this before, but I'm just noticing this now. This is half of the money coming away from them being bullish on GBP. So there's something scary going on with GBP. So as you can see, these guys are pumping money in while these smart money are pulling money out. I would just stay away and watch what's happening. So from what we can see so far, there isn't any alignment. Now, for people that have access to the website, you know that that's not the only COT that we have. We have the raw format, which then covers a lot more assets like the USD, Malaysian, and all of that. And if you go, you can get the same report that we had for Japanese yen is also here, and kind of like a note format. So you can get so much more COT report data, micro Bitcoin, for example, is here and all of that stuff. So, but for the webinar's sake, I tend to just keep it to these ones that I've listed here because they're simply the majors that we look at mainly here. But if you have the membership, you know exactly how to get in here and then check and do more weekly analysis. But for now, we don't really have much from this majors that we have here, so we'll just let things slide. So which means that we don't need to trade this week. We can wait the market out this week while everybody's struggling. We just go have some fun, just go restaurants, go places, do your businesses, whatever you need to do, and then come back next week and check again. So that's all I have for you guys in this week's webinar. Thank you very much for attending, and I'll catch you on the next one. Oh, by the way, if you haven't subscribed, make sure you give us a thumbs up, you give a comment, and you subscribe to the channel. And in addition to that, you can also get your membership if you want to have access to this tool and see exactly what it looks like and see more videos on how it works and all of that good stuff. You can go to business.dameempire.co.uk/pricing. So the link is also somewhere in the description. So if you go down in the description of this video, the link will be there for you. So thank you very much, guys, and I'll catch you in the next one. Take care.